Welcome to this week's market drama. We'll begin with the S&P 500, which was down 3% for the week. NASDAQ was down even more, 5.5% for the week. S&P is now down 5.5% from the recent highs, while NASDAQ is down even more, around 7% from the recent highs. Is their third week in a row for the S&P 500 that we've seen the market go down. Oil was also down 4%. Year to date, oil is now 14.6% up for the year. So what's going on, right? So there are three different factors that are affecting the markets. Some, I think, are short-term concerns. Others should be ones that we pay more attention, right? So the first one is the stock market is currently repricing the Federal Reserve, cutting interest rates only maybe one time that this year versus just 3 months ago, it was expecting to cut 3 times this year, right? So it's expecting the interest rates to stay higher for longer than originally expected. Something that gives us an indication of that, for instance, outside of stock market volatility, is that the Treasury market, specifically the 2-year Treasury yield, has gone from 4.3% up to 5%. Essentially telling us that Treasury investors are expecting 2 years from now for interest rates to be closer to 5 rather than 4.3, right? So that gives us an indication as to what the Treasury market's expecting, and therefore probably why the stock market's also acting very volatile. Why is this repricing occurring? We talked about this every week over the last couple months, which is inflation is coming down, but not at the pace than the stock market was expecting. I was on CNBC last week talking about this. Something that I've been saying is, look, I do agree directionally inflation is going to come down. I think the stock market needed to adjust to this reality of this going to take a little bit longer. The second concern is geopolitical tensions in the Middle East have been rising, and that affects oil prices. Right now, oil seems to have stabilized a little bit, right? You saw oil was down 4% last week. Nonetheless, this is something to keep an eye on, but it is, in my mind, something that's transitory. The third is S&P 500 quarterly earnings are underway, and companies are beating forecasts, but the outlook for future earnings that they're offering has been softer than expected, right? So specifically when we saw the banks. Now, this coming week, turning to what's coming up next. So those are the three, right? Repricing of Federal Reserve rates, geopolitical tensions, and the third one is earnings. So this week we have, on the economic front, we have first quarter GDP numbers, as well as PCE inflation data. As I mentioned in the past, the PCE inflation number is one that the Fed watches very closely, as it intends to incorporate a broader basket than CPI. So we'll keep a close eye on that one. And then for earnings, we have a lot of technology companies, but of the large ones, we have Meta, Google, Microsoft, Tesla, all reporting this week. So it'll be important to see how they do this quarter, but also what outlook they give for future quarters that might set the pace for the stock market direction in the coming weeks. That is it for this week. Stay tuned for next week.